The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. I'm back after 1 month of the new grandson, who's doing very well, by the way. And I've reached a threshold in my life, folks. I know a lot of you folks know that I'm heading towards the finish line of that 8-furlong race, but I had a chance to go to Saratoga Racetrack 3 weeks ago, and it was a very special day of racing. It was on a Friday, and it was at a box, which is really a great place to sit. It was a friend of mine who's a hedge fund manager had tickets, and it was going to be really great. I'd been there several times before. Saratoga is the oldest racetrack in the United States, and it's where Seabiscuit was made famous, and also Secretariat and the Great Man of War, who's the only horse he only lost once, and he lost at Saratoga to a horse named Upset, who was a 70-to-1 shot. I think that was 1919. I wasn't there that day, but I should have been. However, I had a choice that day to make a choice between going to Saratoga Racetrack to be with all the, the big wigs, or to go to Ice Cream Truck Day at my 2-year-old grandson's nursery school. And I chose the Ice Cream Truck Day. And believe me, there was nothing comparable to it. When he saw me there, and his grandma, it was just really, really exciting. And he wanted to share his ice cream cone with me and all the other little kids that were there. And it was the highlight of the trip, other than when the new baby was born. And he's doing quite well. He's a little boy, and he's doing very well. Okay, let's get to the markets here. I titled the newsletter this week, after looking at all the charts over the weekend, that it's very hard to be bullish coming in. Ta-da! It's very hard to be bearish coming in, this week, because of the fact that, the NASDAQ and the Russell didn't even back off at all for 2 weeks. We topped, back on August the 6th, which was the new moon. And, we came down, to the August 30th level, and we really didn't go anywhere to the downside. And this is telling you that the market is extremely strong. And we have a cycle that's due right now. It's out of the Hebrew Bible. It's you sell on Rosh Hashanah and you buy on Yom Kippur. And Rosh Hashanah Yom Kippur is a lunar cycle. It starts on the new moon, which will be tonight, be the 5th, and it goes for 7 days into the high holy days of Yom Kippur. And I was first exposed to this cycle back in the early 80s when I was on the floor of the exchange at the Merc. Ira Epstein, who ran Ira Epstein Commodities, had me on his radio show while I was in Chicago, and his father had followed this cycle for a long time. And then as I started to write books on astrology, I started looking into it more and more. And especially now is because I watch this new moon and full moon, cycle that you buy on the new moon in bull markets, and you sell on the new moons in bear markets. And here tomorrow we're coming into this new moon, and we're going to be completing a really nice ABCD pattern up around the 1655 level or higher. And they could very easily go higher, but that would be the place where you'd want to be looking at it. Well, over the last 12 years, it's worked 8 out of the 12 times. But if you go back and look at the cycle, going back into the 1800s, and our data goes back to 1876, it's about a 70% chance of winning. Now, you only have to hold the short side or the long side for 4 or 5 days. That's all it's good for, because it's a short-term lunar cycle. So what I will be looking for, coming into tomorrow, we'll be looking for a place to put on a very low-risk short. Today was such a no-brainer for a long because we had higher bottoms all along. We made a perfect 786 retracement of the last 4 days down at that 1631 level, and then we came down and made another perfect 61% retracement at the 1635 level. I posted that into Tiger TV, and you're able to see that it was, it just was absolutely perfect. And that completes up around the 1655 to 1660 level. But that doesn't mean, it can't go a lot higher. It's very, very hard to be bearish stocks. I know I'm bearish long term, but boy, when you look at the fact that the NASDAQ and the Russell can't even back off, by more than just a few percentage points, coming in over a 2-week period, you have to really, really respect that. And I think that's something that, has to be, like we say, respected at all costs. Now, I'm going to post the chart of the Dow Jones Industrial Average into the room here, and hopefully we can see it, showing the Bradley model, because, the Dow was making a 786 retracement here over the last 5 or 6 days. It hit the same level of around 14,800. We just couldn't even, go below it. And that's telling us that, the market has strong support there. Now, if we can get the Dow below 14,750, then it's got a chance, to go to the downside. But right now we're in the midst of this rally. It should last at least a couple more days, I would think, and then we'll see what the next thing will be. On the long term, I don't think anything has changed. The long-term bearish pattern on these things. It's just that this short-term time period where we are right now has a little bit of a bullish bias. This reminds me a lot of the time frame in 1987. I remember that so vividly because the market had topped on August the 25th of 1987. That was harmonic convergence. That's where we had 5 planets all at 0 degrees. I mean, it was just an amazing event. It was called, I think it was called harmonic convergence by the astrology people, and it was just really an amazing situation, for something to happen. We came down in August. We came down into September the 26th, and then we rallied up into October the 2nd, and I believe Yom Kippur came in late that year, and as I recall, it was right near that date anyway. We topped on the secondary rally on October the 2nd at the 61% retracement level, and then from October 2nd until October the 19th, which was Black Monday, that was a move of that one day in the Dow was down 16%, which would be equivalent to about 3,500 points, at this level, where we are now. Whether we're going to get a crash or not, I don't really know. If you spend your life trying to predict a crash, folks, you're just going to waste your time. I got really lucky back in 1987, and I got lucky again in 2000. I got pretty lucky too, and I got lucky one more time in 2008. But you're talking about 3 times over a 30-year period where you caught something really dropping fast. You don't want to try to make a living doing that. You're not going to do very well. So the thing that you'd be watching here is to watch the rally back, and then if we go back below the lows of 14,750 in the Dow, then you've got a chance of something to the downside. The Bradley market model is still working because the New York Stock Exchange Index made a double top. It didn't take the top out from May. May 25th was the day that we were looking for. Now we went a lot higher in the NASDAQ, and we went a lot higher in the Russell, but we did not do so in the New York Stock Exchange, and that's the broadest of all the indices that we're looking at. I want to take a second here. Hold on one second, please. I want to salute someone, and that's that swimmer, that lady. I don't know what her name was, but she swam 110 miles from Cuba to Key West, Florida. 110 miles in the water for 53 hours. She's 64 years old. I think that is one of the greatest achievements of physical prowess that I've ever seen. Now, if anybody was ever asked to go to the White House to meet the president, if in fact that's what she wanted to do, then I would think she would be the one to do it, because that's an incredible feat for someone at 64 years of age. I know when I was 64, I couldn't even drive 53 miles, so it was without stopping at least a couple times. So it's really an incredible feat. I mean, it's just when I heard about it, I couldn't even believe it, but it was really quite amazing. So the next thing I wanted to mention was I had someone, one of my classmates from high school. We grew up in, of course, Terre Haute, Indiana, where I was born and raised, and She was a year behind me, and she had a younger brother who was 13 years old. Well, she passed away on August the 20th, as she had been sick for quite some time. And at the very same time that she died, her brother died at the same time, 2,000 miles away. He died unexpectedly of a heart attack. He didn't know that his sister had passed away. He just died of a heart attack. Now, the odds of that happening, I was in Philadelphia when this was occurring. I asked the mathematics genius over there to figure out what would be the odds of a brother and sister, 13 years apart, dying on the same day. And that is about, I think they figured it out, it was about 7 billion to 1. And I just can't believe that. Now, one of my friends also mentioned to me that John Adams and also Thomas Jefferson both died on the same day, July 4th, in the early 1800s. I thought that was, pretty amazing myself, because here are two founders of the, that have signed the Constitution. It died on the same day of July 4th. That was really also an amazing coincidence that I ran into. So I just thought you'd be interested in the odds of that, but it was rather surprising to me. I want to talk a little bit about the foreign currency markets, because we are, we've had some, strong rallies in some of the things like the British pound and also the Japanese yen that are, getting up into levels where they should be getting ready to be sold, in my opinion, and that's something that's going to be real interesting. On tomorrow's show, we've got because I haven't been on for a month and I don't know who was doing my show. I literally didn't have any contact with anybody. I just did trading, for myself and the hedge fund. That's really all I did. And I didn't do any radio shows, interviews, nothing. I just was basically babysitting and, having fun, doing the charts, and that's basically all I was doing. And I actually enjoyed it. I missed the show quite a bit because I know I have to prepare, to do this, and I certainly missed everyone at TFNN, but it was a well-needed break for me, because it was the first time I've taken a long break from TFNN, and I've taken a week or two once in a while, but to take a whole month was really really enjoyable for me, especially with the new baby, and he's a real joy to be around. He doesn't cry very much, and he's already starting to smile, so he's already his grandma's pet, along with our other 2-year-old, who is truly priceless. Now, I wanted to share a couple of charts here that I think really give us a good idea of where we are in some of these markets. And one of the things that I wanted to it's going to take me just a second to bring it up. I wanted to show you the chart of the New York Stock Exchange Index, because that shows that double top that we've looked at on the market. Oh, someone asked a question if my new grandson has traded yet. They both are long gold. We gave them some gold for their birth. So anyway, we've got to take a little break here. If you have any questions, it's 877-927-6648.
TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and discuss trading strategy while gaining high-definition access to all TFNN hosts' charts and screens during their live daily programs. If you're not already a member at TFNN, then the easiest way to become a member is by simply signing up for our $10,000 virtual trading competition, and the rest takes care of itself. In order to register for TFNN's virtual trading competition, you have to sign up by Thursday, September 5th at noon, and that's right around the corner. So don't wait and sign up now. For all the information and to fill out your entry, visit the front page of TFNN.com. TFNN's open house in the Tiger's Den for 2 weeks only, ending September 13th. Sign up today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we have a caller from New Jersey. Vince, are you there?
Welcome back, Larry. Yes, how you doing?
I'm good, sir. What can I do for you today, my friend?
Well, I just want to congratulate you, welcome you back, and I got a false question to ask you. What's your opinion about NYSE?
Well, the New York Stock Exchange, fact is, that's one of the things that I just posted into Tiger TV. We've made a 50% retracement, off of the full moon that we had back on June the 24th. What's happened, though, Vince, is that the NASDAQ and the Russell, which are much smaller indices, they couldn't even make a 38% retracement. This is telling you that shorter term, the smaller cap stuff is a lot more bullish, than the rest of the market. So what I'm watching now is I'm watching to see what type of a rally we get here, because we should come out of here very, very strong. This is not a really super strong day, but it's still strong. But tomorrow will be a very interesting day, because that's the day of the new moon, and we'll see if that's going to be a turning point. Whether it came in early, which I don't think that it did, because that was several days ago, we should know I would imagine by Friday at the latest we'll have a pretty good idea if we're going to go into next week into a strong market. So that's what I'm looking at. Long term, Vince, I'm still very bearish, but short term we might have some more strength here. We just have to wait and see.
That doesn't seem to follow the Bradley model. I'm looking at it. It looks like the Bradley model is turning down.
Well, it is turning down, but we're at a point where you could get a short-term rally because the Bradley model doesn't predict short-term rallies. It usually looks at things going out 6 or 8 weeks or more, and this is just a few-day cycle that we're looking at. That's why you have to wait until early next week, to see where you really are. The fact that the market could not come down very much with the Nasdaq and with the Russell tells me that there's some underlying strength. And when the Dow stayed, exactly at the 786 retracement of this last 2 months, it stayed at that 14,750. It stayed there for 5 days. It couldn't go below it. So that was telling you there's a lot of support coming in at that point. So this is going to be interesting to see how far this rally will take us.
I see. Well, it's nice hearing you again, Larry.
Well, thank you very much for calling, and I always think of you, my friend. I hope you're doing well.
I'm getting there. Thank you very much, Larry.
Okay, Vince. Thanks for calling in, my friend.
Okay, you take care now.
Okay. Okay, getting back to this New York Stock Exchange Index, it's got a chance here, to have a rally of at least 5%, taking it up into the 95-100 level. That would get the Dow, back above the very close to the 15,000 if it can do that. So we'll see if it's going to get to that level. I've had several requests here to talk about gold and silver, and we certainly are going to do that tomorrow, but I'll cover that in the second part of the show. And we also need to talk about Treasury bonds because the Treasury bond market is in big trouble. As if you've ever looked at a chart, you can see that it's just not rallying at all, and the rallies that we do get are very, very minuscule, and that's indicative of what we had happening in gold, when it started to break down from the $1,650 per ounce level. But the gold has just been just an absolute perfect technical market. I mean, it's done exactly what it's supposed to be doing as far as ABCD patterns and hitting the Fibonacci numbers, within just a few dollars. And it just finished one, this past week. We were looking. Well, we'll cover it when we get to the second part, second part of the show. What I did want to mention here is that TFNN has got a really great promotion going, and that is this trading contest. And I highly recommend, if you really want to get involved with that, is to do it because they are a lot of fun, and if you do really well, you can make a few bucks. These started in earnest way back in the early 80s. The commodity companies would bring these out, and you would enter them, and there were prizes involved, and some people. I finished second in a couple of them. I could never beat Frank Tauscher. He was the best. He wrote the Super Trader's Almanac, and he was the best trader that I had ever met, and that's including Amos Hofstetter. And, of course, I only met Amos once, but I knew Frank very well. But he would enter these contests, but instead of using, paper money like everybody else was using, he would use his own money. And on almost every one that he entered, he made more money himself than all the other contestants combined. And I'm not just talking about one or two of these contests. I'm talking about, several. And Frank passed away about 8 or 9 years ago at the age of 59 in Tulsa, unfortunately. Anyway, we've got to take a break here. 877-927-6648.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and from now until September 23rd, you have free access into the Tiger's Den here at TFNN, and believe me, if you ever get a chance to get in, boy, there's some really smart people in that den. I don't want to name them all, but boy, there's some smart folks. And the reason why I know they're smart is I watch what they're doing. Even when I was on vacation, fortunately, I've made some friends in the den, and they would send me emails of what they were doing, and it was really, really great to watch it happening. And it's fun, and you learn a lot, and you meet a lot of nice people. So if you're lonely out there and you don't want to have anybody coming in your house, it's easy to be into the den and meet some nice folks, and you get a lot of great information and tremendous education. I mean, I know these guys. I know Basil, and I know Steve Rhodes, and of course Tom O'Brien, and it's just Bud Rolfs. I mean, I haven't met the fellow that does the Nanex thing, but I know he's very Daryl. I haven't met him, but I know he's very, very good. So it's a really great place to get a lot of information. Someone asked a question during the break about the dollar versus the Japanese yen, and we're completing a Gartley pattern coming in here in the next 50 pips or so, up around that 100 level in the dollar versus the yen. That would also be a 135 lower top pattern going back from May. In other words, we made a top back in May, we made another top back in July, and then we made another top we're coming into right now somewhere in this area, and another 50 pips higher at around par. And from there, we would look to see that the market would probably get ready, to move, to the downside. And this is probably, in all probabilities, it's all part of this same cycle that's pulling stocks up during this time frame where we had this really strong support, coming in. So, that's the main thing, that I'm looking at with this. Now, I wanted to take a few minutes here. And I know it's not the commodity hour, but I know so many of us are involved, with gold and silver and everything that I think it's important that we bring this up. And if you'll give me just a second, I will hopefully find the gold. Here we are. We should be okay. And just give me a second. Technically challenged, as you all know, and we will just bring this up. We have some really big things have happened in gold just recently. And the main thing that I wanted to bring out to us is the fact that, we've been looking for this area of around this 1435 level. We hit for 1434 5 days ago, and we've held that level, but now we're getting ready to move to the downside. I think we're going to get down somewhere around the 1320 level in gold sometime over the next few weeks. It'll take at least 2 weeks to get to that level because we're only 5 days down from the high. But we've been making really nice ABCD patterns all along in gold. I mean, it's just like this thing, you could set your watch by gold and silver. They're just really amazing. And we'll just see if I can get the chart in here so that everybody gets to see it. If you don't, they'll let me know in just a second if I get it into Tiger TV. It's been a while since I've worked with the toggles and stuff that I need to put the charts in, and we'll see if that it does come up. I guess it did, so we'll just worry about that. Now, if you're interested in gold and you like to trade it, like most of the folks in the Tiger TV family. There's some really nice patterns that happen with it on the shorter term patterns, and that's the thing that's really interesting, because I wanted to bring up the what's happened over the last 5 or 6 days, because we've made a beautiful Gartley pattern coming in last night right up at the 61% retracement level. And if you'll get a chance to go into Tiger TV, you'll see that happened up around the 1415 level, and now we're breaking down badly below 1685, and that sets up a very large ABCD pattern, going down for the next few days. That would take us, somewhere in the neighborhood of this 1660 level. So we're about $20 away. Now, the way gold moves, that can happen in a matter of just a few hours. We could be there without too much trouble. We had the same thing happening, in silver. Silver had a great deal of resistance up there at that $25 per ounce level, and now we're getting ready to retest these. Now, I still think that gold and silver have made some type of major bottoms, and that we have a chance, to go a lot higher, but we're going to see what happens in this sell-off to tell us, where the support is going to come in, and see if it's going to do this. I mean, silver and gold are meant to be traded. I know it's nice to be an investor in them and hold them for 5 or 6 or 7 years like you can at sometimes, but with times like we have now with these swings of $200 and $300, it's much easier to be a trader than to try to be an investor. And that's coming as an oxymoron from someone, folks, because I have been long gold and silver since 1966, and I've been buying gold coins and silver coins. In fact, that's what I do for the kids when they're born is we give them gold coins, and and that they've appreciated over the years, but that doesn't mean they're going to, because during 1980 to 2003, gold was in a bear market for 23 years, and that surprised a whole lot of people, but it's really quite amazing that market stayed down that much. Now we have the same type of situation occurring in another market that we've talked about many times here on TFNN, and that is the I'm going to bring this chart up because I think this is the one that we've been watching for a great deal of time, and that is the long-term bond market. And we have topped up there. We made that butterfly pattern about a year ago, and bonds have started to break down quite a bit. And we are, looking at, a bond market that I think is getting ready to really start to melt down. In fact, here again, another oxymoron because I'm trying to buy it for a bounce. If I can get it down around that 129.30 level, 129.25, I'd be looking to, be a buyer of the bonds, looking for a short-term bounce. But here again, I'm not risking more than just a few $100s on that particular trade. Long-term bonds look, a great deal lower. I'm just hoping, and I know that's a terrible trading word, but I'd like to see the bonds get a really strong rally up to a 38% retracement of that last high, and I will be issuing what I think is probably the last hurrah for a rally in the bond market. Rates are going higher, folks. 30-year mortgages are already above 4%. Rates are moving higher just about everywhere, and I think that it's going to, this market that has been going on for 32 years, this bull market in interest rates, in other words, lower interest rates and higher bonds, has come to an end, and we're going to be looking at some real serious ramifications because no one is expecting, anything really dramatic, and I think this is what we're going to get. Is something pretty dramatic that we're going to get higher interest rates. Why it will happen or how it will occur, I'm not actually sure, but I do believe that it is coming, and it's just a matter of time. It's already started, and what we're trying to see is if we can get this little bounce here in the Treasury bonds, and that would give us something, to be able to, at least try, to get a reasonable short sale off where you wouldn't have to risk very much at all. And that's where the problem lies, is because, it's just not giving us very much of a chance, to be short the bonds. The Treasury notes, I'm going to put the chart for the Treasury notes into the Tiger TV so you can see that the notes have been, breaking badly. We've made a butterfly pattern down here that's held so far, and that should give us a little bit of a rally. And I would think if we got the notes to rally 4 or 5 points, then we would be looking at something, a good place to, to get short, somewhere in the notes and bonds about 5 or 6 points higher. I can't sell them in the hole here because it just is too difficult to, to risk, to find out what you're going to risk because, if they don't cascade down from there, you're sitting there with a position that you want to sell on the rally and you sold on a break to the downside, and that's not good. I've never had any luck. And I know this business has very little to do with luck, but I've never had any success selling weakness or buying strength. It's just not in my nature. And I really understand technical stuff, and I try to understand risk. But for buying strength and selling weakness, I have a really difficult time with that. That's why the pattern recognition thing has worked well, because it tells me exactly where I am as far as the amount of risk that I have to use, and also the probability of whether I'm going to be a winner or a loser on the trade. I know that there's going to be times where you just can't get anything right, and there's going to be other times where you can't do anything wrong, and you just got to even it out. That's the bottom line of what you're trying to do when you're when you're trading. There's really no other way to to actually do this. Now, I wanted to put the long-term weekly chart of the Treasury notes in here because I think this is where the real key to this market lies, because we've been breaking down. We've had these very, very small rallies, and if we don't get a rally here very soon, we're going to start melting down very, very quickly, and we could easily go down to the lows of 2009, which would make the things going up quite a bit. Someone asked a question about the euro versus the U.S. dollar. We have talked about this one many times over the past few weeks, and we were waiting for that the market to complete what we thought was going to be the reverse point wave pattern, the 5-point reverse wave, and it certainly did that. And if I will just give me a second and I can find it, I will put it up. And oh dear, let me see. Oh dear, let me see if I can find it. Give me a second here. It's not the easiest thing in the world when I'm doing this, but well, I'll have to. Oh, you know what I can do? I can pull it up off my regular charts. Give me a second here, and it'll only take me just a second to pull it up because I know I keep this one in my archive because I trade the euro every single day, and we should be at. Oh, there we go. We'll be able to see this very easily, and you'll be able to see all the structures that are here. If I can just. Oh, now it's playing games with me. Oh dear, this is what we don't want to see. Hold on one second here. All I have to do is to put the numbers in, and you'll be able to see this pattern occurring. We've had a huge break here, well over $3,000 from the level that we talked about last week about this 5-point reversal, and now we're just having a little bit of a bounce back, getting away from the oversold condition. But the euro, stopped on a beautiful 1, 2, 3, 4, 5 reverse point wave. We brought that out last week. It went right up to that 134.50 level, and this is our first, rally back day out of the last 7 or 8 days, which is normal. We're having the same thing happening with the British pound. We're having the same thing happening with the Japanese yen. And, of course, the dollar's backing off a little bit, but the dollar still has some pretty good support down around the 82 level would be my guess. But I still think we're in a bear market in the euro versus the dollar. If we get above 135 now, I will be 100% wrong, and I would really urge people to don't be short the euro if we get above 135, especially after we backed off for 10 days here. $3 or more than $3,000, almost $4,000, and we're just giving a little bit of this back right now. We've given back about $700 or $800 of that amount that the market dropped. So I would not be too concerned about the market bouncing a little bit today, because we are in a situation where the market has been very, very oversold, and we're just correcting that. That's the bottom line of looking at the euro at that particular spot. The pound did just about the exact same thing, and we're doing and in fact I already did the one with the Japanese yen. So you can see that they're all doing pretty much the same thing, at the same time. So that's the bottom line of what we're looking at with the currencies. We think we're over a really strong spot where the dollar's getting ready to strengthen. Now, whether that will occur or not, we don't know, but we just know that this particular time, the amount of money that you have to risk in the pound, the yen, and those are the better ones to short because they have better patterns. The euro is just straight down, and all you have is just a little bit of a bounce. It's very difficult to find a place to short the euro in here, whereas it's easy to find a spot in the yen and also in the euro. We've had a strong move in the Australian dollar. As most of you know, it came off of that long-term 786 retracement down around that 88 level and has had a really good bounce. On tomorrow's show, we're going to we got to talk about commodities because we've had some fantastic moves over the past month in commodities. Wonderful ABCD moves, soybeans, all of this had tremendous moves. We're going to take a little break here. 877-927-6648.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and someone had a question about silver, so I posted the silver chart going back several years, and it's been a picture of perfect technical market. The last rally that we just had up at this $25 per ounce level stopped at 50% of the last rally high that we had, 38% of the higher high that was a little before that. And then someone asked the question is if they thought that silver was going to go above $50 an ounce sometime next year. Yes, I think it will go above $50 per ounce on August the 19th of 2014 at 10 o'clock in the morning. It might be off by about a couple of minutes, but it should be very, very close. If I knew that silver was going to be up over $50 an ounce next year, I would start buying now. And unfortunately, I don't know. And the good part is nobody else does either. This is a game of probabilities. What I'm trying to do is to try to find a logical place, where I could buy something and not risk very much. I was buying gold at $12.12 an ounce on the 61% retracement. I bought it again at $13.35 an ounce. I got out of it at $14.28 an ounce just a week or so ago, and I'm waiting to buy it back again. And all I'm doing is I'm waiting for a retracement. Now, if you wanted to find a low-risk entry point for silver, you'd have to look at around $21 a share per ounce. That's what I would be looking at. But to try to put me on the spot or anyone on the spot to think, silver is going to double in price sometime next year is not fair. And it's not fair to you, and it's not fair to the person you're asking. They might give you an answer, but I can tell you right now that their answer is as good as your answer, because nobody knows whether silver is going to double in price from this level or not. You're going to hear people, tell you about that, but frankly, I've heard this, many, many times before. When I was at Drexel in 1980, silver was at $47 an ounce and gold was at $800 an ounce, and, everybody was looking at $2,000 gold and $100 silver, and on January the 20th, it topped and didn't go any higher for 23 years. So, don't get locked in on thinking something's going to double. That's not the way to look at it. But when someone gives you their idea of where something is, remember that that's their opinion, and you have to accept it for their opinion, because it's just, that's all it is. It's just someone's opinion. Some opinions are better than others, but that's it. I don't look at the news. I don't listen to the news. I'm listening to this thing about Syria, and I don't believe anything that the government tells me. They told me there were weapons of mass destruction in Iraq, and there weren't there. So why was this not an accident? I don't know. I don't understand the politics behind it. I know everybody wants to, go to war right away, but I think they have to get more information about this. That's just my opinion. I have to get off my soapbox and see what the next step is going to be. But if we can get gold down to that around 13.10 longer term here over the next couple of weeks, I'd certainly be looking at that. And also, I would be looking at silver at around $21 per ounce. On the commodity front, we got a lot of things happening. Tomorrow's show, I'm going to try to have Rich Anderson on tomorrow, because I keep in touch with Rich no matter where I am, and we've been watching a lot of these moves happening. We did get a really strong rally in corn of about 30 cents or so, and wheat 30 or 40 cents, but they gave most of it back. So there's really really not a lot going on in the commodity markets right now. Sugar is still basing it around the $16 per pound level, so it's not much going on in there. Crude oil has held the butterfly pattern up at the 112 per barrel level, and we'll see. Anyway, that's it, folks. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.